This week, traders' attention has been focused only on the FOMC meeting minutes. Although traders are not waiting for a new hike, they are trying to predict when the first key rate cut will take place. However, yesterday's inflation figures puzzled everyone. Core inflation stays near 4%, twice exceeding the targeted level of 2% settled by the Fed Reserve as a condition for favorable economic development. In other words, there are no reasons to lower the benchmark rate. By the way, the employment data issued last week allows the regulator to maintain a hawkish stance. Investors are confused, growth have stagnated, and everyone is looking forward to the Fed's chair statements. Traders are also waiting for hints about a key rate cut from the European and UK central banks, which will hold their meetings tomorrow. Notably, German entrepreneurs are also waiting for a switch to a looser approach. Yesterday, Germany issued its economic sentiment report, which unveiled a rise to the highest level since March, although the Eurozone's largest economy is suffering a budget crisis. The current situation assessment and economic expectations have slightly improved. The fact is that more and more entrepreneurs expect inflation to slacken and a key rate cut by the European Central Bank in the midterm. Let us take a look at the trading chart. A decline in the volume of short positions on the euro and traders' confusion caused by yesterday's inflation figures led to an insignificant rise in the euro-dollar pair to 1.08. At the present, there are no radical changes that could violate the structure of the correctional movement. Under the current conditions, traders will consider the upward scenario if the price consolidates above 1.08, and the downward scenario suggests the continuation of the correctional phase if the price settles below 1.0750. Meanwhile, the pound sterling attracted traders after the publication of the UK economic growth figures. In October, GDP dropped by 0.3%. The unexpected contraction may force the Bank of England to start lowering the key rate earlier than planned. However, yesterday the pound-dollar pair returned to 1.2600. It got stuck between the levels of 1.25 and 1.26, which served as the first stage of the accumulation process. Taking into account fundamental factors, the price may start falling faster if it settles below 1.25. And that's all for now. We continue to follow developments in the financial markets. Subscribe to the channel and follow news with us, and see you soon.